Hello and welcome to Nothing Ventured with me, Aarish Shah. Today in the studio with me, I have Alex Theuma and Ken Thomas. Alex is the founder and CEO of SaaStock, Europe's largest B2B SaaS community, bringing together founders, investors, and operators to accelerate growth and knowledge sharing. After building SaaStock into a global phenomenon, with conferences across multiple continents and a thriving founder community, he launched BackFuture Ventures, a B2B SaaS-focused venture capital fund to leverage his deep sector insights and network to back the next generation of software innovators. Joining Alex is Ken Thomas, principal at BackFuture Ventures, whose experience spans traditional banking in New York and London, fintech partnerships, and early-stage B2B SaaS investing. Ken brings operational rigor and strategic thinking to the partnership, shaped by his experiences navigating fintech scale-ups and financial innovation. In today's episode, we talk about building a network being crucial to building a VC firm.
You need to have built a network over 10 years. And I felt like the timing that we anticipated, so we started just over a year ago, like with BackFuture, that was the right time. 7 years ago would have been too early.
How VC is as qualitative as it is quantitative.
A lot of it is how you gel with someone, how can you manage expectations and have conversations that could be open and honest but not unfair.
Raising a fund on the brink of the SVB collapse and on the evolution of SaaS. Is it really dead?
I think in the beginning there was very much a coupling of the SaaStock brand with the BackFuture brand, but as we've kind of progressed this new deck, we're kind of decoupling it a bit to say, okay, like this is standalone, but the USP is still there.
How AI is the technology while SaaS is the business model, and on the fatigue of virtual events in a world that wants face-to-face.
It became like overwhelming. There was 100 virtual events every day. So people got sick of it. And we realized that the real value, nothing beats face-to-face, right?
Let's get straight into it. Alex, Ken, really great to have you in the studio. Thank you for joining me. It's a real pleasure to have you here today.
Good to be here.
Yeah, thanks for likewise.
Amazing. Well, look, let's jump straight in. So let's talk about this kind of evolution of SaaStock from kind of community to capital. So you've gone from building SaaStock to BackFuture. So you spent almost a decade building SaaStock from a blog and a podcast into kind of the premier SaaS community in Europe. What point did you realize that transitioning into VC was the natural next step? And how did your mindset shift from that kind of community builder to investor? And then given both of your unique backgrounds, how do you see community-driven VC models evolving? And do you think this is now becoming more of the new standard for early stage investing?
Yeah, good question. So, it's something that has, I've been encouraged to do, I think, for the best part of 7 years. And I think 7 years ago, it would have been too early. And I've heard, and I'm sure you've heard before, that when launching a VC, certainly like one of the paths and suggestions is that you need to have built a network over 10 years. And I have now, done that. I'm in my 10th year. And it's a pretty solid network, right? So I felt like the timing and we anticipated. So like we started just over a year ago, like with BackFuture, that was the right time. 7 years ago would have been too early and would probably have like failed compared to where we are now. But I think like also it was like post-COVID in 2022 when the fire really lit in my belly as to like, this is what I really want to do in like a coexistence with the SaaStock world, but also in a post-SaaStock world. This is like where I want to be in 20 years' time. And I don't necessarily want to be the CEO of SaaStock in 20 years' time, or perhaps, hand over the reins to somebody else. And, I want SaaStock still to be around, at that point. So I think, yeah, it was a couple of years ago, and it, driven by a lot of encouragement, driven by my own curiosity to learn and develop further, learn something new, learn by doing. I'd never built a community or a conference before. How did I do it? I just kind of learned by doing, and I often find that that's the best way, right? Yeah. So I think that was it, and I was just kind of really. Then when we look at like what did SaaStock provide to our community, right? We really helped predominantly founders, and from inception to exit. We could say cradle's grave, but it's probably a bit more of a negative connotation there. But really, from having that idea, or spawning the idea, from being inspired at SaaStock, right, to getting the capital from other investors at SaaStock, through learning the playbooks, learning how to take that next step, and even then connecting them with M&A and PE and so on. What we didn't have was actually providing capital ourselves, and I think
so. Let me just dig into that for a second, right? So the question I would pose is, and I guess you could you could take whatever line you could look at this from two different angles, but how does building a community, I get, right, and obviously you are seeing these businesses at the community, and therefore you have the deal flow side of it, right? I get that, right? That's clear. You have potentially even the co-investment side of it, right? Because you also have VCs and angels and others. But from the perspective of which one of these is going to work, how were you able to build the conviction that you would be able to have the conviction to take bets on some of these businesses? Because I would assume, like, at an event, you're going to see the best of the best, right? You're going to see the ones that are certainly, at least from a media perspective, are kind of riding high and they're out there in the press. But how do you pick that pre-seed, that founder that sat in the audience kind of really scribbling notes away versus the big, because you're not investing in the bigger guys, you're not investing at those later stages. So how did that translation work for you?
Look, it's a great question, right? And I think a big part of the art is in the picking, but like ultimately we're placing a lot of bets, right? And we are, with the power law, hoping that a couple of them actually work. What I would say is that given that I've probably spoken to and met more SaaS companies than most, over the years,
just one or two,
over the years, I think I've always had a good eye for a good eye or a sense for picking like what company is like, or what product is really hot, and and seeing them take off, right, and being almost like this early adopter, and given my exposure and involvement within that, and I've had feedback around that. But what I would say is that when we look at it like now as to, okay, we're first time investors, and like it's not this magic wand that we have or special power that we have. What we do have is a great network, and we're speaking to the network, right? That includes all of our LPs as well, right? We have a process, right? We're looking at certain indicators, right? But ultimately, we're placing bets. But what we're doing when I think about this 10-year network that we've built, and where we're seeing some of the opportunities that I think, let's say somebody, if they didn't have that network and built what we built with SaaStock, would come into VC and try to replicate, is that because of the value that we've added, because of the relationships that I have, we're getting opportunities, and certainly now, not all of the deals that we've done 13, but for instance, one of the deals that we've done is, one of the co-founders of WalkMe, he took the company public. He's now chairman of, the second company. I think they're out of stealth now. And they did a safe round led by Mangrove Capital and a lot of what I would call, top tier strategics in there. And they wanted, he wanted me to come in because of my relationship with him and so on. And we've had other examples, right? And so where these would be very hot competitive deals, but perhaps because of the relationship, because of the currency that I've built over years, that we're getting access to. And I think a lot of tier 2, tier 3 VCs perhaps would not be able to do that.
So maybe, Ken, a question for you then, right? Because you don't come from the SaaStock side of things. Okay, you were in journalism. But so I guess two questions, right? Like, do all the deals you look at come via SaaStock? Or has it broadened out beyond that? And then what are your thoughts on this kind of community-led VC sort of transition? Because it feels like, we're seeing more and more, and we certainly saw more and more during the kind of 19, 20, 21 years. It seemed like a lot of VCs, their the way they were able to build their funds or the way they were able to raise their capital was by nature of having 50,000 followers on Twitter or 100,000 followers on LinkedIn or whatever the numbers might look like. What's your take? So do you think that these community-driven VC models are here to stay and will evolve? And do you think that's kind of becoming a more of a standard at early stage? And obviously, as I mentioned, like, I think what will be interesting is when the deals start coming through to you, and presumably they already are, but come through to you beyond SaaStock, right? Where you actually are just seen for being, the go-to at early stage for these sort of deals.
Yeah, I think it's been interesting to see how the channels have kind of refined over time. So like if we're targeting, for instance, 36 deals for the fund, we say we have, like I said, Dublin and Austin, which we have 2 pitch competitions there. Like all things good, we invest in the winner. So that's 6 out of 36 are at that point. You mentioned with the LP one we had with Rafael Sueri, there's another one we did out of Spain, there's another one we did out of the US that came via like that SaaStock network, where they very clearly like they had their lead, took most of the round, and it's up to the founder who they want on there. So like I said, there's a lot of currency there. We haven't lost many deals that we really wanted to get into, but I think for the amount of equity and capital we take out of a round, to have a distribution channel that is SaaStock, it makes a lot of sense. So it's very, in the beginning, I guess we as we started implementing our process, there's a lot to learn there. We have.
Do you have on your term sheets that SaaStock will promote like portfolio companies of BackFuture?
Yeah, well, there's, I guess, portfolio support is something we've refined over time. Like make sure they have booths, make sure they're having the right meetings and things like that. I think as we've kind of gone on, we've seen that as they kind of progress through their life cycle, having those speaking opportunities, getting earned media as well makes a lot of sense. I mean, we've had one of our portfolio companies that won the pitch competition that helped their round a lot. And then they went on the SaaS Revolution podcast that Alex has. That's kind of refined it a lot. I think from the community-driven aspect, when I left the last company I worked for, which is fintech, I have been through every aspect of the commercial org. I've ended up on partnerships, and that really taught me a lot about what it means to, how long it takes to build those things, what it actually means, leading with value. And what I've found interesting is in VC, despite how, I guess it all comes down to a transaction or two, hopefully the one you initially invest in and the one you actually get your capital back from. A lot of this is very qualitative. A lot of it is how you gel with someone, how can you manage expectations and have conversations that could be open and honest, but not like unfair, I guess, if that makes sense. So that's been kind of there. So as myself moving into it, I've always chose, if we're doing, 1 to 3 deals a quarter, how many founders, how many people are going to be meeting during that period that can provide value to, like, making those connections that to myself wouldn't cost me anything but help people in my network that knows, and that kind of develops on itself, which kind of ties into the SaaStock ecosystem as well.
Yeah, so I mean, I guess the point that's coming out is community can be the driver, it can even be the source, but over time it becomes more than that. It becomes distribution channel, it becomes a testing ground, I guess, right, for some of the earlier stage businesses. But it also, is exactly as you said, if you're getting earned media out of it, if you're speaking on stage or whatever, it builds profile, brand, presence. So it's kind of 360 for the founders and for yourselves as well, because you're investing in these businesses. Like, presumably just because you've invested in a business doesn't necessarily mean they'll make it to stage, right? Like, so, if the business after a year, 2 years is struggling or whatever, it's not necessarily one you're going to showcase just for the sake of the fund, right?
No, 100%. And look, we're investing at pre-seed and seed stage, and most of the people that we have on the SaaStock stage, they've built $100 million plus businesses. Yeah. So we look to see where we can help. And each conference, we've got our US coming up, and so when we have our portfolio companies saying, can we speak? And majority they don't, because it's just they're too early, right? But we look at other ways in which we can help them, and it's okay. Like we'll sort you out a booth. We'll connect you to the right people. Maybe we'll invite you to the speaker dinners. We'll get you on the podcast. These sort of things. Right?
Yeah, there are kind of entry level sort of routes that you can take. Let's move on, right? Because you launched BackFuture ventures during a really challenging time, right? Tech market downturn. Silicon Valley Bank had literally collapsed, I think, when we were first talking. And a real freeze in venture funding, right? So we're talking, this would have been 23, right?
Yeah.
So can you share some of your experiences and the key lessons that you learned raising a first-time fund during that kind of period of uncertainty?
Yeah, so I guess technically that's when we started to raise. It wasn't, let's say, the public launch as such, but pretty much, and I think it was one of the first checks and one of the first LP conversations that I had was with Tahi Nam, who's managing director of Storm Ventures, and I was on the phone to him. I think we'd sent him the deck, which had taken ages to get ready.
And Ken was already on the team at this stage?
You were already on the team.
Okay. So you were in early.
Yeah. And he said to me, have you seen the news? Silicon Valley Bank has collapsed. And I was like, interesting. He said, yeah, this is going to be very interesting times, generally for the market, but also for BackFuture starting to raise. Having said that, he committed to the fund, which was great. And I think ultimately he was placing a bet on me and on us, and I'm grateful for that. But initially, actually, I felt like what was happening in the market was not necessarily hampering us initially, but perhaps this was naivety, right? But we kind of got out of the gates, and I think we probably closed the first 25 LPs, in the first sort of couple of months, right? What I was getting, and I think all general partners or all people sort of raising, when they're looking for LPs, you're always going to get a lot of no's, right? And I was getting frustrated with some of the no's because I knew I'd built relationships with these people for 10 years.
I've had people tell me, I've had founders who are now raising kind of funds telling me it's so much easier to raise as a founder than it is to raise as a GP.
Yeah.
It's harder to raise from LPs than it is to raise institutional capital for your startup. Yeah.
I thought at the beginning it was actually
the other way,
sort
right?
of easy,
yeah.
But it wasn't. And what I was seeing was that there was a lot of people that I knew very well with a lot of liquidity that were just saying, no, we're holding on to this, and given the market, and it doesn't seem like tech's a great space, and this is a very illiquid investment, that they weren't committing, right? So I think eventually, perhaps after that honeymoon period, even though whilst the markets weren't good, we started to see that it was becoming harder and harder, and we started to we were having conversation with fund of funds who were finding it very difficult to raise themselves, right? And so it was certainly not the best of times. And then we were also seeing, all over LinkedIn that a number of solo GPs or first-time funds that they were trying to raise, but they ended up just stopping because it was very difficult, and especially for emerging managers and first-time funds, it perhaps was one of the worst times to go for it.
And I don't think, I think some of that stickiness has remained. I mean, I would argue that I know lots of people raising funds at the moment. It's a struggle, whether it's fund 1 or fund 3, right? It's not an easy time to be out there raising. I mean, Ken, you had a bit of a giggle there over the deck. One of the things I find really interesting is, I've had a lot of people come on this podcast and say to me, we went out with a deck, but actually, despite having a really kind of niche thesis, we'd have LPs coming back saying, we don't understand this. You need to, make it more accessible, more understandable. What was the journey in terms of the evolution of the thesis of BackFuture? Because to some extent, I would have expected it to be relatively simple. SaaStock community, deal flow, co-investors. We understand SaaS. That's what we're doing. Very, very kind of, core niche. What was the sort of pushback you were getting on the deck? Or in general?
Well, I think it was just track record and the timing. But I think it was very clear from everyone that we spoke to that, it's a conference and we're spinning out of it. I think in the beginning, there was very much a coupling of the SaaStock brand with the BackFuture brand.
Yeah.
But as we've kind of progressed this new deck, we're kind of decoupling it a bit to say, okay, this is standalone, but the USP is still there.
Yeah.
That's why we're saying it. But
I've seen that before, like with say Founders Factory, Brent Hoban's accelerator, and First Minute Capital, which is one of the funds that you see funded, but like they are very, very separate entities, and there is it is not a given that if you are part of the Founders Factory accelerator that you're going to receive follow-on capital or any capital from First Minute. It's just a standalone fund. And I think that's important, right? Like, I mean, because there are two ways you could look at it. You could say, okay, everyone at pre-seed that comes to SaaStock will bung anywhere between a 10 to 50,000 check into, right? Like you could play the arbitrage game, right? Like you're just going to build a portfolio, basically become an asset manager, and you would expect that some of those bets are going to pay off, right? Or you could take the more VC sort of focus, but portfolio construction in terms of working towards power law to make it happen, right? But I guess, I mean, this kind of leads me to really the core question I want to ask you guys, if I'm honest, right? Like, is SaaS dead? Right, like you talked about Lovable earlier, right? But with that kind of explosion of generative AI, no-code tools, increasing product commoditization, is the traditional SaaS playbook still relevant today, right? So if I look at my own business, like we don't have a CRM. We've built that. Well, we have a CRM rather, but we've built that using low-code tools. We've got Airtable, got NAN driving workflows, et cetera, and I'm seeing that more and more, right? Like, I don't need to go and buy the $100 a month product. I can quote unquote build it myself. So how do you see the kind of SaaS business model evolving over the next few years? And you've also been quite vocal about changes in the SaaS landscape. So are we moving towards a future dominated by highly capital efficient AI first SaaS businesses, or is there still space for that kind of more traditional heavily VC funded model?
I think it's a bit of both, with maybe more of a leaning to the latter and the AI first and the capital efficient. And certainly, let's say six months ago, sort of plus, and there was a lot of clickbait, online around SaaS is dead, and then you listen to a podcast, and then there was actually, this is not what we're really saying, but they're just picking out the clickbait from that. And certainly, like within SaaStock, it's named SaaStock. There were people on the team that were sharing the clickbait and going, "Oh my God, do we need to? Is SaaS
we pivot
dying?
out of SaaS?
Do we need to be called AI stock or whatever?" Right? I'm not one to kind of like panic, and I'm sort of like quite calm to look into this, right? And so it's certainly something that I didn't ignore, but I think where I sit today, like I firmly believe that SaaS is evolving. It's not dead. That AI is a great enhancer and tailwind into the SaaS industry.
It's a technology,
that's
right?
breathing new life.
I mean, AI is a technology and SaaS is a business model.
Yeah, exactly. So it's making SaaS better. It's making SaaS products better. You talked about, and I think that's fair, and we'll see a lot of these use cases like with yourself, that, okay, you're not paying Salesforce a ton of money. You built your own CRM using Airtable, low-code, no-code tools. But what are they? They're SaaS tools, right?
Yeah, sure.
And low-code, no-code has been around for ages. And now, like with AI, it's just kind of better that you can just build something, whether it's an app or a website, in one day. So I think now it's just got better. So all the new SaaS companies that are like born today are AI powered. They're AI first, right? And they have the AI features, which is just going to create quicker wow moments and return on investment. And what we have is this legacy pool of SaaS companies, let's say 30,000 or so, and some of them are 20 years old or 10 years old, that have to catch up. And if they don't, it's pretty much table stakes that they have to have AI in their product and figure that out, whether they have to rebuild their entire product stack and entire way of selling and so on to compete. If they don't do something, they're going to become irrelevant, right? But I think it's an exciting opportunity, and what I'm seeing from most of these SaaS companies, and even like, let's say, some of the early movers, and I know it's kind of like an obvious one, but Intercom, they kind of had to, their customer service, they had to jump onto it, and now they've built their Fin AI and so on, and they're all in on AI, right? And they've rebuilt their products, right, in an AI first world. So what we're seeing is, look, SaaS is at the application layer. The application layer in AI is where all the money is going to be made. That's what everyone is saying. This is where all the investment is going in. So I think it's absolutely not dead. It's like new life has been breathed into this next generation of SaaS, and that model is still going to be around now. Like the software as a service, and pay monthly or pay annually.
That's changing.
We'll see like whether it's like consumption based, more of that consumption based pricing, I don't know, prompt based pricing or whatever, right? We're going to see more models, but ultimately it's applications, it's software, and we're just going to have better products and more money in the market.
I mean, I think I saw a tweet or a Z or whatever they're called now. I have yet to figure that out. But anyway, that's a separate conversation for another podcast. But it basically was a really simple example, right? Which was, if you are building a business that uses AI to solve, I don't know, for argument's sake, bills of lading, right? You are a logistics or a fintech company with AI. You are not an AI company, right? And I think that's the kind of point you're making. AI as the technology drives the product. The product is then sold in a manner that is software as a service, which is the business model, right?
Yeah.
So I think the problem is that a lot of people think about SaaS as either a technology or a vertical in and of itself, but it is a vertical within business models, but it is not a vertical in terms of application, right? And so I guess, Ken, like from your perspective, like how and you come from a fintech background, for example, right? Like, so how do you think that founders are going to really internalize this shift, right? And not think about it from we're building an AI company, but we're still, because I think that's part of the problem, by the way. I think like lots of founders are out there, we are building an AI company, but no, you're actually building a fintech, or you're building a logistics, or you're building a whatever company. So what we're seeing is obviously the spicy valuations happening within AI. So how do you think about that when you're talking to founders, especially those that are like presenting themselves as an AI company rather than a more sensible definition?
I think a preface is like betting on the horse and the jockey, right? You're still very much looking at the jockey and asking them why they're doing this. And depending what they're going after, is saying where a lot of success has been in enterprise sales and SaaS. Just because you've built an AI application does not mean you're going to be doing enterprise sales, right? Because you talk about the procurement process. Are you experiencing that? Like security, there's so much to be considered there.
Which, by the way, like going to your earlier point about lovable, that's a problem. Like I can build up to here, but geez, like once you start thinking about environments, security keys, when you start thinking about security more generally, like it becomes difficult. You still need someone to build the kind of actual software like that actually can be shipped out, right?
Yeah, and that's what I think about, like, I guess personally about construction is like, the application layer, that's like I said, there's a lot of stuff's gonna go on there. But then what is the depth and stickiness of something like this? I mean, first mover advantage is great. First mover advantage also doesn't mean you're going to be the winner. If you choose to take some money off the table, if they as they go on, sure. But what's the core product that's going to be kind of sticky? It doesn't mean you have to have as large of a team as before, but I think a lot of the same principles will remain. But are we 10xing everyone on the team? Probably not yet, but it's getting there. Continue to be more efficient, but I think a lot of the same principles will stay the same depending on the customers. There's an article I saw, just because we can have smaller teams, maybe SMEs are now viable to scale into as an ICP. But again, the same things still apply.
I don't agree with that at all.
Yeah. I mean, churn is going to remain the same, maybe higher. So it's still not going to be a smoothing out of revenue over time. So it's still going to be very unpredictable, and there's going to be.
My take is enterprise. Like when you are building a SaaS tool, the only market that makes sense is enterprise. Like bar a few very neat. Like so, if you think about highly transactional businesses like Xero, or kind of companies that are ubiquitous, and like Xero only has 6% of the market. Like let's not forget that. Like those make sense. I've tried to build in that space, and like SMEs, they're a pain. Like they are not very good customers to have on board because they're probably like the most reluctant to pay, but also the most demanding, and they're so fragmented that actually, and so where I think the future is going is highly verticalized, highly niche, like really, really kind of single pain point solutions. Like to your point around, do you buy a Salesforce or do you build yourself? Well, the reason we didn't, we used to use HubSpot. HubSpot didn't do it for me because it couldn't capture what I needed to capture, but I can capture what I need to capture now using the tools that I'm using. And I think, the best businesses that will be built over the next 3-5 years, or certainly 1-3 years, are going to be the ones that really look at a very, very hyper-localized niche and solve that really well, where there is still a market that's big enough. Because I think the other thing is, and I'd love to get your kind of take on this, is, from my perspective, SaaS can be highly capital efficient, right? Like, I mean, it lends itself to non-dilutive funding. Like venture funding used to be kind of the fuel to drive marketing or whatever, but I think that's less relevant in a world where there is non-dilutive funding, but also you get product-led growth, et cetera, all the buzzwords. But I equally wonder whether founders today are going out looking for the venture style outcome. Because if you can build a business where you can own 80%, let's say, rather than 20%, and you can sell it for 100 million or even 50 million for that matter, like $40 million or pounds is pretty transformational, generational capital that you are building for yourself. Like, I mean, that is life-changing money, right? So I'd love to understand if you think you're going to see a shift in that direction as well.
I think 100%. I think the barriers to entry to build are lower than ever. And, in the era of capital efficient, like VC companies are being told to be capital efficient, like effectively run like a bootstrap company. Yep. Right. Why not run like a bootstrap company, but not,
not take the money,
not take the money. And with that, what is enough, right? Is it 10 million? Is it 30 million? Is it 40 million? Do you really want to build $1 billion business and
can you
own 10% of it? Can you? Because not many can't, right? I know like a lot of people that have built great bootstrap businesses that have incredible wealth, pay themselves a lot of money or have made a lot of money through exit. If I personally was doing it, that would be the path that I would do. But I think a lot more bootstrap companies are going to be born today, fewer VC-backed. Whilst the VC market is a little bit hot again because of AI, I still feel that you're just going to see so many more bootstrap companies. And
I think there's going to be a huge amount of competition for VCs trying to get into the very few deals, right? Which then begs the question, what happens, right? Like,
well, you're going to see probably fewer VCs, right?
You get into the VC winter. So let's move to, we kind of talked about this a little bit in the quick fire. COVID forced events online and then rapidly back offline. From your perspective, how did it impact SaaStock? How did the shift impact SaaStock, and how did that reinforce your thinking about the role of human connection?
It was definitely an experience, and I think we just kind of saw, obviously, within a space of a month, I think in February, seeing the news and COVID spreading and wondering what's going on, through to I think early March. You can't come back into the office anymore, right? Everybody worked from home. And we had that year, so this is 2020, we had SaaStock conferences planned in Asia, in Singapore, in the US, in Europe, certainly those three. The Asian conference was not too far away. It was like a few months after lockdown. And we could see that actually we were not going to be able to do any of the in-person events, right? And we had to cancel the in-person events. We actually didn't get our money back, certainly from we'd put the most money into the Asia conference, and that was where most of that money did not come back into the business. We'd also scaled up to the team. I mean, we were 24 people at this point, and not really knowing, certainly for a moment, of what does this year look like? What do we do? What is the plan? And I think just the initial moment, or that there was this initial day when all this shit was happening, was oh fuck, is this Black Swan event that I never thought of going to be the thing that kills my growing business, right? And then whether it was the same day or the next day, I woke up and it's like, of course, I'm not going to let it kill the business, right? I've got responsibilities. I've got to figure out the way. And, you know, we got together in a war room with, you know, leadership team, and we had like 7 ideas of that we brainstormed together of like, what can we do? And the most obvious one was like, okay, we're going to go into virtual events. And then we just moved, you know, with our backs to the walls, like faster, you know, than we'd ever been before, you know, with a clear plan. I think we were pretty much not the first to announce, because I think Web Summit, you know, had announced that they were going to be doing, like, they moved one of their events to a virtual event. I don't know if it was strategic, but we put our virtual conference before their virtual conference. And so it was actually one of the first sort of globally from the startup big tech sort of sector to happen. And it was a relative success, but it was a revenue generator, right? You know, we sold tickets, we were figuring this out, and we used Hopin. We were one of the first customers of Hopin. I remember having the calls with Johnny, you know, earlier on, and working with him to just help me figure this out. Like, how do we price
how does it work?
What you know, what does this mean? What's the value going to be? So we put together the first event. We were lucky again because this was, you know, I don't know, 6 years into our journey, that we had a customer base that was pretty loyal to us. We had, you know, sponsors that didn't want to see us fail. And I think in some instances, some sponsors sponsored us because they just wanted to see us keep afloat.
I would also imagine that people wanted connection, right? Like, despite...
Yeah, there was a novelty in what we were doing. So there was curiosity. Yeah. People wanted connection because everybody was isolated. And look, I think the first SaaStock virtual conference was a success, and you know, we had feedback like, this is the gold standard of virtual events. It was also the first one, right? So that standard could have got better, and I think a lot of people learned from that, including other conferences. What we saw was it did provide connection to an extent, right? But ultimately, I mean, look, everybody got fatigued with the virtual events. It became like overwhelming. There was, you know, 100 virtual events every day. So people got sick of it, and we realized that the real value, nothing beats face-to-face, right? And that probably this is the overarching takeaway through both, let's say, our delegates for the events and our sponsors, that virtual was not beating face-to-face, right? So when we came back out of that, and when we came back into the first physical conference in 2022, everybody had a grin ear to ear, you know, like 3,000 people, because they were happy to be back, happy to see each other again, happy to do business face to face, right? And now I think when we take even like that connection from virtual conferences and face to face in the AI world, you know, that we're living in now, and everybody's you know, using all these AI tools to make themselves superhuman and, you know, be efficient or whatever,
but yet
or
becoming actually less human and less engaging as a result.
But I think what I'm seeing and what the sentiment is out there is that, okay, these AI tools are great, but still nothing's beating face to face, and a lot of sales, and certainly, you know, the mid and enterprise level is getting back to the golf course, is getting back to the steak dinners, and human connections are becoming even more important in a AI driven world. Yeah,
I mean, I would like, you know, we talked about it earlier, right? VC is a relationship game, like that's why the community aspect works, but not just venture. Like I've built. Like everything I've ever built, everywhere I've ever worked has been a human to human connection. Like there is nothing that, you know, there is nothing that beats speaking to someone and doing a deal. Now you can get partway there on Zoom for sure, right? But one of the reasons I do this podcast, no doubt one of the reasons you do your own, is because you can have a much more human, personal conversation when you're sitting face to face with someone in a room. I mean, Ken, from your perspective, that kind of move from virtual back again, like I guess one question is, were you an avid SaaStock kind of attendee previously? Or was that something that you kind of did before you joined BackFuture?
No, I actually discovered SaaStock. So there's local chapters. Yeah. So when I first came to London for my master's, I wasn't sure how long I was going to be here. Here we are 5 years later. But one thing I wanted to make sure I did was...
First of many Americans, I think, that are going to come over and spend some time in the UK.
Very timely. And, you know, I did it. I was like, I want to get into fintech and I want to have some experience in London and working. So I did an internship at this company called Shuttle. They do payment orchestration. And the CRO of that company, Nick Dunce, is the London city lead for that. So that's how I came to understand like this whole ecosystem and what that was. And that was 2021. So yeah, I mean, about a few years of being understanding of it. And then there was a SaaStock founder membership. I think, well, that was Christmas. So I was 22. So I helped out with that, booking that. And that's kind of where you really got to get involved with things.
Yeah.
So I've always been aware of it.
I mean, I guess the question I'd have is, you know, to me, what seemed like a sensible middle ground was like a number of, like, I would have imagined that the world would have evolved from like everything virtual to actually virtual was okay for some stuff. So let's do our core events live, but let's also have a virtual offering, right? But it seems like that didn't happen. I don't know if that was because the tools sort of closed down and we all kind of know what happened with Hopin, or if it was just felt like actually that, you know, people are more than happy to just keep coming in person. But like, I would have imagined like, you know, so if you think about like TED and TEDx, right? Like I'd have imagined you'd had a situation where you'd had your large events in person and live, but you'd have maybe had some more niche or separate events that could have been sort of at least quasi-virtual, if not fully virtual. But that didn't seem to happen. Was there just no appetite for that, do you think?
Look, I thought that was what was going to happen as well. You know, that when I first looked at Hopin, and again, I think their timing was very good because this was just before COVID and just before lockdown. I remember like sharing it with the team and speaking with the team and saying like, this looks really good. Like we can do the physical events, but we can have this virtual offering and this will be, you know, quite innovative. And we'll have people that can't maybe come to the physical events, maybe because of geography or certain abilities to do so, you know, to get that audience as well. Again, I just think people got fatigued and they realized that face-to-face was the best, that they weren't getting the real connections. That effectively...
I think that's the big thing. Like you can't have... So if I think about the value of an event, and I talk to like a lot of people that go to say Slush, right? They don't go to the events. It's the side, it's like the, you know, the dinners or the club nights or whatever, the party bits. And that's where you have the conversation. You can have a conversation with 10 people. You can't do that on a virtual. Right?
Exactly. Like it's good conferences, good events provide meaningful conversations. Yeah. And you weren't getting meaningful conversations on virtual. So ultimately, it just ended up being more of a content media play.
Yeah, so you're sort of watching. Rather than...
and there is so much content and media out there anyway. So do you really need to do that? So I think like for us, and I'm sure like for others, realizing like the real value comes at the in-person event, the meaningful conversations happen there. Let's focus on that, and you know, not distract ourselves with a virtual offering.
Yeah, no, look, it makes a huge amount of sense. So look, just before we kind of wrap up, I have a couple of questions. One which I've been asking our guests for the last year or so, but another one that I've just sort of added in just to make it a bit more human. So the first one is, what is one thing that you have contrarian conviction about from any area of life, whether that's work, politics, socially, or at home?
I don't think I've got too many like contrarian like convictions. I don't want to be like a sort of like.
I think the only contrarian conviction is that there are no contrarian convictions. That's like my contrarian conviction. Yeah.
I know. I guess personally, I think funny as an American, I think being in Europe, I think the risk appetite on a lot of things and willingness to at least explore certain things at an earlier stage. But I think that's just more regional. Maybe
our contrarian conviction is we got an American and a Brit here. That Ken thinks everybody's going to leave the US and that it's better in Europe at the moment. And I'm thinking, well, actually, maybe it's better in the US than in Europe.
I am interested in that. Is very contrarian. I would like to understand your thinking behind that at some point. But no, look, I mean, I agree. Like, it's really, I've asked this question now a number of times, and I think you either get a very sort of stock answer or something that isn't really necessarily a conviction or is like so obviously off the wall that like, yeah anyone's going to say that. But I think the problem is because we've grown up or grown up, we've had in the last sort of, decade or so, certainly from the US, you see it on Twitter, X all the time, predominantly from a certain cadre of VCs, who will just be really like line in the sand. This is my conviction. And it's performative. Like you can tell that it's performative, right? And I think that's where we've gotten to, because I think having a conviction is one thing, but having a contrarian conviction and being right, that's where the difficulty lies. So maybe the more human question, so that we can get to know the real yous, what is one thing that moves you the most emotionally, Ken?
I think just human interaction. Truly, like
that is the least contrarian.
No, well, I mean, I guess what moves you emotionally, I wouldn't say that's like the contrarian aspect, but
I'm joking.
I spend most of my time I'd rather just have the time to get a coffee with someone. If we could skip, obviously probably do an initial 30-minute call, but events, coffees, like just having like the real interaction with anyone. Skipping the pitch, let's not do that. Let's just have a conversation.
Yeah.
I think you're laughing with people. I mean, like. First call you have with VC and a founder and you're laughing about something, I think that's some of the best times. That makes it the most easiest way.
Yeah, love it. Alex?
I think for me, like I've got 2 daughters, and if I ever watch something which is like daddy-daughter, like a movie or, parent sort of daughter, like it really gets to me.
Yeah.
And actually, I think my kids have never seen me cry, and they make a thing out of it. Because generally I don't cry. But I remember watching The Wild Robot in 3D with one of my kids.
Yeah.
And I found it a very moving movie, but I had the 3D glasses on, and there were moments where I was wiping away, like I was welling up, wiping away the tears. So my daughter didn't see it, but
no, honey, it's just I've got a little bit of a smudge on there.
A reaction to the 3D glasses, but anything like that just gets me.
It's interesting. I've found more recently that I'm being moved more by both music and movies, and music in movies than I ever used to be. The sad thing for us is, I guess, we're now at the stage where we're watching Game of Thrones with our daughters rather than, which it can be quite uncomfortable. But no, I completely love that. And I think, when you have young kids, having that ability to connect, especially when they're also so online, right? Like having that ability to find something shared is really beautiful. Look, Alex, Ken, it's been absolutely amazing having you on the podcast. Thank you so much for joining me. For our audience, where can they find you online? Are you on LinkedIn, Twitter? Where's the best place for them to find you on the interweb?
For me, probably LinkedIn is the best place. So Alex Theuma, and you'll find me pretty active these days. So I'm kind of focusing there. I've almost dropped X.
I'm getting close.
For the moment. So LinkedIn. I need to do more on YouTube, but I don't have my own channel. Like everything is kind of going on the SaaStock channel. On YouTube. So LinkedIn.
Okay, amazing. Ken?
Yeah, Kenneth Thomas, the only one on LinkedIn. So very easy to find.
We'll be putting the links in the show notes for sure.
And BackFuture Ventures. That's a LinkedIn page for that. Or BackFuture.vc.
Yeah, absolutely. Well, look, thank you so much for joining. I really appreciate you being here.
Thanks for having us.
Thank you for having us.